Hey everyone, Adam from Interaxis here. Wanted to share the weekly update for mostly for financial advisors, financial professionals coming at you from Interaxis. It was a super busy week here, the week of September 12th. Of course, it was merge week, and that was probably the biggest news of the week. The merge on Ethereum. Remember, this is taking Ethereum, the chain, from proof of work to proof of stake. This has been huge. It's been in the making basically since Ethereum began, as they wanted to go to proof of stake. But of course they were trying to be very safe about it and secure. And in the meantime, Ethereum was growing in use. So they the developers, the ETH core developers, have been building towards this, and the move from proof of work to proof of stake is pretty huge. As I saw or heard some people describe it, it is essentially like, or it was essentially like trying to convert your car from a gas engine to an electric engine, or to electric motor, while driving like 110 miles per hour down the highway. And they were able to do so successfully. And for the last few days, actually, since sometime, I don't know, late Thursday night, late Wednesday night, something like that, early Thursday morning. Since then, new blocks on the Ethereum blockchain have been validated via proof of stake rather than mined via proof of work. And this is a big deal because it cuts down on the energy consumption by like 99.999% or something like that. But it has some other really important effects. One is, one, you can see how important it is that it's front and center on the New York Times, right? That doesn't happen a lot with crypto, except when there's some major negative event. And in this case, it wasn't a major negative event, it was a major positive event. But what's happening from an issuance perspective is kind of important, because now, and this is where it affects you as a financial professional, if you're an advisor and you're looking at ETH as value one, what it means is I can continue to stake my ETH. The move to proof of stake works, which means if I own ETH and I stake it, I could be earning anywhere from 4 to 8% more ETH every year by staking it. And staking it means I'm trying to perpetuate the security of the Ethereum network, trying to move the Ethereum network forward. And in so doing, I get rewarded. And the way I get rewarded is I get more ETH. Okay, so then what it also means is, for every block on Ethereum, when we were doing proof of work, it was having to mint or create a tremendous amount of new ETH, because you had to actually reward those miners for connecting their miners, for using electricity and such. But now we don't have to reward as much, so the issuance is way down. If you couple that with EIP 1559, which happened last year, which is actually burning ETH for every transaction, what we get is this deflationary or disinflationary money. So if you go to this ultrasound.money site, you can actually see the supply change in ETH since the merge. So it wasn't too long ago. We've only added 1,269 new ETH since the merge. Now, the interesting part of this particular site is, if I wanted to simulate what would have happened in that amount of time had we maintained proof of work, we would have minted almost 30,000 ETH. There would be almost 30,000 more ETH in the supply since then. But since we moved to proof of stake, it's only 1,300. That's good, because now we want to look at the supply of ETH. And remember that the value overall of ETH is going to depend on how many people want to stake it. It's going to depend on the supply and the demand. The demand, of course, is going to come from how many people want to use ETH for gas fees on the network. And the supply is going to be based on, obviously how much is issued, right? So now what we have is a really small supply growth. We've burned 267, or as of now, we're burning 267,000 ETH a year, and we're issuing about 603,000 per year. If I were to simulate the proof of work, we'd be issuing 4,900 ETH per year. So that's a huge difference. So we're not issuing nearly as much. The supply isn't growing exponentially anymore. The supply is growing really small, and in effect, it could at some point determine, if we go down here to the supply projections, at some point there's going to be a peak supply, and then it's actually going to start going down. We're actually going to start burning more ETH on every block than we actually supply. That, of course, is important, because if the value is based on somewhat supply and demand, and the demand continues to go up because more people are building applications, and the supply is going down, then theoretically there should be more value there of ETH, the crypto asset, the cryptocurrency. What this also means for me, because I'm a big believer in actually utilizing the system, what this means for me also is we can now move on from the merge. This was a big event, and a lot of teams were kind of waiting for this to happen so that we could move forward with the other parts of what we had at one point called ETH 2.0, moving forward with things like layer twos and scaling and all those other things, because the merge was not meant to scale. The merge is not there to bring fees down or bring speed down or anything like that, or increase the number of transactions. The merge is just there to go from proof of work to proof of stake, because once that efficiency is there, then everything else can kind of fall into place. But this was without a doubt the biggest deal, a huge technological achievement. Now, there are some questions, of course, especially for financial advisors or financial professionals. One is around tax. Is there any sort of tax implication? Now, I'm not a CPA and I don't pretend to be, so I would call your attention to Mike Metris on cryptotaxpro.eth, who actually answered some of these. So you can hit this particular Twitter thread, and he kind of talks about why he extrapolates that there is no taxable event involved in ETH going from proof of work to proof of stake. Now, there is also the issue that came up that especially Chair Gensler of the SEC, Gary Gensler, said maybe this makes ETH more like a security. And why is that? Because I might hold ETH with the idea that I'm going to stake it and earn some sort of interest on it, earn some sort of yield on it, and that sounds suspiciously like a security. So again, I'm not a lawyer, I'm not a securities lawyer. I can see where that would be a little frightening. Jake Chervinsky, who's with the Blockchain Association and a very good lawyer and talks about this quite a bit. Basically, if you go to his thread and read what he says, I haven't heard any compelling argument as to why staking an asset makes it more like a security under the Howey test. And as a matter of fact, he has another tweet where he basically says anyone who really knows securities law thinks that ETH became less like a security through the merge than more like a security. So that's really interesting that you can go read about. It's interesting. So the merger was, of course, supposed to be the news of the week. And then we had so many other big issues come out. So one, I'm going to go to my friends at Blockworks, right? Fidelity mulls Bitcoin trading on all brokerage accounts. So basically, Fidelity has been custodying Bitcoin for a while, but only doing it for super large accounts. At one point, it was only over 2 million in Bitcoin. Then it was only over 1 million, and they've kind of moved that down. And now what they're saying, what they're reporting is they're thinking about adding it to all retail accounts. So anyone who has a Fidelity account can just go buy Bitcoin. Galaxy Digital CEO Mike Novogratz said, he kind of hinted that he talked to someone at Fidelity. He knows people at Fidelity, and they are going to do it. Fidelity hasn't come out and said it and made the announcement, but Mike Novogratz hinted at it, and some people at Fidelity have been saying, yes, we're open to it. This is a big deal because anyone who has a Fidelity account can automatically, basically sell their Tesla stock or something and go buy Bitcoin. It's big for, of course, the demand for Bitcoin, the price of Bitcoin. This is going to be Bitcoin only, but this is a big deal. This is a big deal for the price. And as an advisor, you go, all right, there's going to be more people that can potentially buy and sell, of course, Bitcoin. Who knows if they're going to know what they're doing. And as an advisor, that's important because if you know crypto, you want to be able to help those people, right? And you're going to be able to look at if they have a Fidelity brokerage account that's separate from you, or they come to you and they have a Fidelity brokerage account and they've bought Bitcoin in it, you now have the ability to talk to them about crypto, assuming you know crypto. So now Fidelity piled on top of that because they said we can't have the merge take all the news. And here we have this news. And I'm going to go to my friends at CoinDesk because I'm equal opportunity like that. Schwab, Citadel, Fidelity, a few others, including Virtu Networks, and a few venture capital firms, Sequoia and Paradigm, have teamed up, and they're going to create this new crypto exchange all together, right? This is a monster deal for financial professionals. And why is that? Because now if they build this, they are likely going to add in the rails. I would have to guess they add in the rails for you as advisors to help manage crypto assets. They're going to make it a lot easier. And I have to imagine that the likes of Schwab and Fidelity are going to attach their trading tools to this particular exchange. This is huge because this is monster traditional finance firms. And even Citadel, where Ken Griffin has been vehemently against crypto in the past, has changed his tune, and now they are backing this. Now, they aren't going to do this if they think this is a fad or a bubble or something like that. They are not going to put their money and their time and their names behind this unless they think this is incredibly viable and valuable. So that's a big thing for you as advisors. If you've been on the fence and you've been wondering, is crypto going to make it, when is it going to get easier? This is going to make it easier for you as an advisor. When it gets here, ideally, it'll likely make it easier. It will give a lot more access. It will give a lot more liquidity. It will give a ton of liquidity, I think, because if you add Fidelity and Schwab and Citadel and all of these, and if they're all providing liquidity, if you're all trading with one another, that's a tremendous amount of liquidity, a tremendous amount more Bitcoin and ETH and whatever else they're going to put within this EDX markets. This is an incredibly big deal that the traditional finance companies are coming this way. Now, this doesn't, in my opinion, doesn't do anything for the underlying use of decentralized finance or anything, but what it does do is it helps it helps you as financial advisors, it helps retail investors with more options and more opportunities from names that they know and trust, from Schwab and Fidelity that they know and trust, that so many people have been custodying assets with for so long. This is monster news, almost to the point that on any other week, this would be the news of the week. But of course, we had the merge. So we have those particular pieces of information. Then, as if that wasn't enough, our friends at the White House came out with their report on their comprehensive framework for responsible development in digital assets. I have here the fact sheet that you can go read at whitehouse.gov. You can find this. You can go actually download. I admit I have not read it yet. I plan to do that over the weekend, and we'll come out with a report next week. We'll come out with an update next week based on this. I've heard from a lot of people that it's just a lot of kind of fluff and talk, but I want to go read it. This is huge news. This is a monster week for crypto, especially if you're a financial professional. What it says is, one, we have the merge, right? So Ethereum is kind of changing its issuance, and it's moving to this more ESG friendly, I guess, or carbon friendly way of actually doing business, of processing transactions, and the idea of staking and earning interest on your ETH is different, and Ethereum can move on. Then you had huge traditional players come into the market, or say they're coming into the market, into the crypto market, and potentially giving you, the advisor, the ability to add crypto to your practice a little more easily with a tremendous amount more liquidity. And they're potentially adding more demand, more people that can buy and of course sell crypto now, which should add to demand and could theoretically add to the price, could theoretically make the prices go up, because you have that many more people that can buy. And then you have the White House, the administration, coming out with something about digital assets. What this all says is this is all viable. The government's looking at it. Huge traditional companies are looking at it. It's more viable from a carbon offsetting perspective, or from a environmental perspective. All these things happen. It's time as advisors to learn about this. It's not going away. So, of course, we're very biased. If you're a financial advisor and you haven't learned about crypto, now's the time to start learning. If you have learned about it, good on you. I'm excited that you're listening to this. I'm excited you're doing it. We'd love to hear how you're viewing it and what your clients are thinking. So again, thank you so much. This is the weekly update. If you want to learn more about crypto, we're starting a new cohort of our certified digital asset advisor course. I will have that link if you go to interaxis.io and go to the link for CDAA, you'll see where you can sign up for the next cohort, which in this case starts next week. I will actually be at mainnet, at Masari's mainnet conference. I will be speaking about our DAO called Planner DAO. I have a talk called An RIA Walks Into a DAO, which is very clever. At least the name is clever, and I didn't come up with it. So I will be giving that talk. If anyone is in New York, if anyone is at mainnet, come find me. I'd love to talk to you. I'd love to talk to financial advisors about how they're using or how they're viewing crypto. Overall, thank you all for listening. And I look forward to next week's update, where I might have some updates on the happenings at mainnet in New York City.